Everyone, welcome to the market review. And this week was kind of a consolidation one. We closed, how did we close? Plus 2.48, but it was an inside week. If I zoom in, or let's do this. Oops. If I zoom in, we see that we are within the boundaries of this candle, and this is our mother candle, marked here between the highs and the lows here. But things are again surprisingly bullish. From flow, from the entire setup, I think we go higher, or at least we go to the upper side of this range, and maybe get rejected there. But I'm pretty sure we will retest the highs of this candle in the 67, 62 area before we go down. Uh, the hope, quote unquote hope, for the bears is actually earnings and not mega caps, but banks. So when we look at SPY, it doesn't look that spectacular. Like Friday was an inside candle, a green one, but we closed basically above all the moving averages, the relevant ones, which is kind of okay. But what SPY doesn't show us is that we retested the 55 EMA, which basically counts as a low retest. If we go to lower time frames here, it's good enough to call it a low retest, and we dropped, attempted to go lower, failed, attempted to go lower, failed again, and this is bullish. This tends to cause a counter move in the opposite direction that we have already seen, that gives us a breakout. uh, it's complicated as always, and again, don't see us really going higher than this. Maybe a bit like going above and hugging the long-term trend line, which is this, which I still think is relevant. So basically, we are at potential breakout and don't really see us breaking out, but we might do an overshoot. So something like this, go here and just hug this for a while, maybe do one poke above, and eventually reversing down. But for now, like hammer candle, it looks good. Flow has been okay. We're coming into earnings, which I think is going to be the main thing next week. And if that holds up, there is no reason to be bearish, basically. We also have CPI next Friday, even though the government is shut down, but they're doing it to for some reason. I don't remember exactly. Thursday, Friday. CPI on a Friday. Don't think the shutdown is going to be over, but still, this is still consolidation, like I said, and until we get outside the boundaries of this candle, there is no strong bias either way. Actually, let me do it like I did in the US 500. So basically, this is our expected range. Uh, Even if we break out of this pennant, we should only go to the top, or we should only go to the bottom. For SPY we did, but it was pre-market, basically. See, like we retested this was just pre-market, but the boundaries of the candle had been retested, and this counts as a low retest. So this is kind of bullish, strangely. Another very dubious thing is this. Basically, we had a huge VIX move, and we obviously can see it. Like 78% VIX move from top to bottom, and for this VIX move, SPY didn't do much. Like we had this initial drop, which caused the initial movement, but on this whole thing here, uh, we didn't do anything. And again, on top of this, on VVIX, we took out several ghost prints. This one, this one, this one. They're no longer relevant because they have been tested. We still have this one here, and we might actually uh, get it. But think of something like this. So I think VIX will stay around this 20 level for a couple more days. or at least Monday and Tuesday. And we could potentially get another spike up that helps us get VVIX. So we can get to this VVIX ghost print without VIX making a high. So it would be something like this, let's say. But VVIX actually goes higher and takes out this ghost print as well. All the at the same time, while SPY doesn't even do a low retest. Like we could do something like go higher on SPY. It actually hits the upper bounds of the range, and then we just drop again, retest the lows here, but no new lows, and everything comes together to give us a quote-unquote correction without actually making new lows and breaking down. So this it seems like everything is delayed again. The only thing that I think can change the situation, these are all, not all, but the most important earning next week. And we have Xeon. If you remember from first day, this is the one that minus 13% that is allegedly the cockroach in the system, and it has earnings Monday post market. Sorry. I think if this goes badly and the market doesn't like it and thinks something rotten is at the core, we might actually get that push down. But afterwards, things are looking fine. I'll go over some of the expected earnings next week um to show what I found interesting. And let's do that right now. But yeah, things are looking constructive. So we have CLF on Monday pre-market and STLD post-market. I drew this for CLF a while back. We are above the AVU up from this drop here. Target allegedly 17. Most likely, if the market likes earnings, we can go significantly higher and actually maybe gap here and go higher. But I left this one in because of STLD actually, because it looks like a much better setup for a breakout. Like we could see a long-term breakout here if earnings are good, and that would give us a minimum target of 190. Most likely it's gonna go above this, but like breaking out of this consolidation, it's been in since 2024 more or less, 2023 actually. So a breakout here for STLD could give it quite a boost and most likely take it to 200. Then Xeon I already mentioned because it might make or break the market depending on the outcome and how the market reacts to it. We have Coca-Cola post-market. I think we had some flow a couple of weeks ago and it's been going up since. Didn't retest the AVU up here and may have a breakout here. If we get a breakout from this falling wedge setup, we target is this 76, 77 area, 77, yeah. Which is the basically a trend line. Then we have GE, kind of a bull pennant looking thing. We'll see. Looks okay. Shouldn't have that big of a move, but like 320. ELV I left here because it's the first of the healthcare insurance names, and I I have posted and seen some bearish flow on UNH. It will be interesting to see the first name reporting and see where it goes because it will likely affect the rest of the names. Then we have LMT, which again had some flow a couple of weeks back. Target if on this breakout is much higher, something like this, on this horizontal breakout. And now it looks like a backtest of the breakout. We have earnings on Tuesday before market. If it proves to be bullish, it should give us the next leg up. So we did this pullback to the breakout point. Now we should see a bounce. And if we see a bounce, we should get the next leg up to 575. Philip Morris falling wedge setup. Tuesday before market again. Breakout should retest this high area here, 183, 185, Yeah, something like this. So if we get a breakout, we should see a follow-through move. Uh, 3M has this large pennant. It really hasn't gone down. And actually, let me switch to the default mode. I want to see the other stuff as well. But basically, in what's the word, compression. So I don't know if we get a breakout, but watch for it. So if we get either below this AVO up or below above this, other than that, we should see more consolidation before eventually we get a big move either way. GM. So GM is sitting surprisingly at highs with the potential for an all-time high breakout. Yeah. In my opinion, there's no reason for the automakers to be bullish, but given the tariff situation and everything else, but we shall see. Like it's pretty constructive. Like on the weekly, we retested the 21 EMA and bounced, made a good candle last week, so we should see continuation and potentially we get an all-time high breakout, which again has a lot of upside if we get it. Like this, we can call all of this until now consolidation for the move higher. Like it's sort of like a cup and handle that has already made the handle like this. So we already backtested this and we made the handle. Now we should in theory go higher, and just counting like this. Come on, click the fucking thing. Let's just counting from the handle. We have like an 86 target if we break out. Netflix is here because I have no idea about it and wanted to say that I have no idea about it. Uh, Still, like the fact that it's hugging the AVO up without breaking down makes me lean a bit bullish. These are large trades that happened on June OPEX and end of May, and we are right. They're acting as resistance. But were we to go above, it's also a wedge breakout, and we would get above these trades. It gives a bit of, I would assume we get at least a retest of this 1231, the previous high here. Were we to go above these levels that have been, like I said, I have been acting as resistance, but we're basically compressing between the AVU up from the April low and these levels, uh, and it looks close to the apex. So I don't think we get much more consolidation here before it has to choose to either go down or go up in a significant way. This one, I like the way it looked. Again, in compression, earnings coming up, big falling wedge, lots of potential for breakout. Like it looks pretty good. Doesn't seem to want to go lower. But for all of these are mostly longer term trades. What I'm describing is not a suggestion to play earnings. It can go either way. But if we get earnings and they go in a specific way, most of the things that I mentioned are chases. So we can wait for earnings, see the way it goes, and then just chase and see how high we can follow. So this would be the target area. Now maybe lower like this. This would be the target, so 550. Texas Instruments has earnings Tuesday after hours. Same kind of look, like it's corrected. We have a nice falling wedge. We're near the apex. A move here should have significant momentum to the upside. Should retest at least 200 area, potentially go back to the highs here. Like lots of potential for TXN if things play out well. Then we have Mattel. I have both Mattel and Hasbro on this list. I wanted to show the long-term chart. So we've been in this, let's say, descending triangle for quite a while now, since 2022, and it's been consolidating, let's say. It tried to break down once and failed, and this is a very bullish sign. Like the failed breakdown is quite bullish, but it's still been in consolidation since then. If we get a breakout, I would expect we go to like 45-ish, something like this. My bias is bullish as well. Like strangely, a lot of bullish bias on many of these names. So this would be the target area. At a minimum, we would get 30, but most likely 35. And I wanted to showcase this 2020, no, 2003, 2004 consolidation, which looks very, very similar to what we had here. And same as my expectation now, it broke out and we went to 30 before reversing down and going lower. But same kind of look, like it tried to break down as well and failed. The failed breakdown is a very bullish sign here. So this looks very similar to what we were seeing now, even the same amount of time, like the size of the consolidation, and then a breakout that takes it quite a ways highs. And not only this, we also have Hasbro, which has already broken out. It recaptured the horizontal level here, so we have a horizontal breakout. It looks kind of like a Head and Shoulders that tried to break down and once again failed to break down. And one of the most bullish setups in technical analysis is the Head and Shoulders that fails. So Head and Shoulders should it's a bearish setup in theory if it realizes, and it has a target of reaching this. So it should have gone to 65, but it didn't. So it broke down, failed, and recovered almost immediately. This is quite a bullish setup, and this changes it into the opposite. So basically, we should see a bullish breakout that doubles the size of the Head and Shoulder setup. So now we're no longer looking at a breakdown to 65. We're looking at a move to 90. So both Hasbro and uh, Mattel looking pretty good here for earnings. Again, not suggesting you play earnings, but once we see, for example, maybe we play earnings if we see Mattel doing well, and then we play which is earlier in the week. Where is it? Here. So Tuesday after market, and then we play Hasbro. Hasbro has more tech stuff, like it has games, it has Might and Magic. So it's even better to play Hasbro after Mattel if Mattel does good. So now the target is this, and if we look at the horizontal level, it's about right. Yeah. So this would be the target 90. Okay, go back to here. This is random name that I thought looked good. Also kind of has like a Head and Shoulders look, but hasn't broken down. And we have a head we have also a horizontal level that might stick here. So if this bounces at this level and earnings is fine and the market likes it, we should be looking at like 250-ish, something like this. Let's count. At the minimum, it should be a high retest. So this would be this, and then we double it. Like 240 is not 250. But remember that these are minimum targets, not this is not the expected maximum. It's the baseline size of the move. It could be, it's usually more than this. So this is the setup. Then we have tech. Once again, kind of a Head and Shoulders look, which you can argue has already been met and failed to break down. Uh, and this is like a metals name. It's copper mostly, but does some precious metals as well. And also in consolidation for a very long time. Uh, we could also use it as a precursor of FCX. If tech does good, most likely FCX will do good as well. And it again looks pretty constructive pullback here when we had that dump in copper prices. Now it's hugging the ribbon. Looks like we have a sort of consolidation here, bull flag kind of looking thing, and it should go higher. Why it's on the list? Because this consolidation here also have kind of like a huge cup and handle, and now we should be ready to break out for the long term here. And it's a big one, just measuring from the double up target. Let's assume we 102. So basically more than a double up as the baseline target. Obviously, I hope you guys understand that I'm not talking about a move over a month. I'm talking over probably years. It took a lot of time to get to this. It's not going to take the same amount of time to break out, and if it breaks out to get to here, but still it's going to take like probably a year or something. So this is why it's on the list. Uh, Basically, huge cup and handle. We can see that this double bottom, we are basically at target. So the target for the double bottom here was more or less met, and it was indeed a double up around approximately. Now we're looking at a potential breakout here for a metal name into an inflationary environment, gold booming and so on. Uh, Other metals should follow as well. So yeah, would not be surprised to see tech break out and go to 100. Then we have Tesla. Tesla is on the list because of flow. Last week we had those huge 520 bets for December. It's looking like it's trying to break out, looking quite constructive here. Bounced on the 21 EMA. It went a bit lower here, but ever since then, every time it tries to go lower and get below the 21 EMA, which is where this green and this green meet, it's been bouncing. And on Friday, it lifted off basically. And if it has follow through next week, lots of room to go higher. IBM, same kind of look. It has like this broadening formation thing here. We have a reborn reconnect and bounce. Didn't really go crazy on Friday, but again, it looks constructive. We'll see on Wednesday. If it goes higher, target would be the trend line from the broadening formation here, which the broadening formation is a negative structure, is a bearish one. So what should eventually happen is basically this, go back to around here eventually. We shall see. Eventually means maybe it will take a year or two, but uh, this is the setup. So target is 330-ish. Kinder Morgan, it's idea that the structure is consolidating, earnings coming up, could break down, could go higher. We shall see. Again, not advocating to play earnings. I'm advocating to chase the move once it happens, and we shall see which way this one goes. AA. This had some flow up a while back. Target was 43. My target was 43. We have broken the horizontal level and consolidating above. I would expect now we kind of have a bull flag looking thing or bull pennant like this and this bouncing on the 13 EMA on inside the ribbon. So I would expect this to do well for earnings and continue its move to 43. KNX, there was some news this week that made it pop on Thursday. Seems like an upgrade. And had gapped up plus 643. And on Friday, it tried to go down and made a nice candle here. I would expect we break out. And if we break out, we should go to 55-ish at the minimum. So this is the first target, 54, 55. Bigger target is 61. We also have earnings um, on Wednesday. This is a transportation stock. I'm kind of surprised that it's doing well, honestly, in considering the economic environment. So we have this broken trend line, which should be back tested, and that will mean like just getting to 55. Uh, if we get into a recession, this should be horrible. So this should do something like this if we get into a recession. This would be the play out. But a move to 55 seems plausible. AL didn't want this one. FCX, like I said, is tied to tech. If tech does well, I would expect FCX to do well as well. We had that dump previously. Now we go back, and it sort of looks like a falling wedge on lower time frames. So this looks like a consolidation, just a pullback, and it will attempt to go higher afterwards and go here at least. Kind of the same look, like we broke the trend line, but we should do a full backtest of it at least. So go to 47, maybe get rejected here. I don't know. We shall see. Honeywell, allegedly aerospace and defense, and is one of the names that has underperformed, has a big falling wedge getting to apex in compression here. I would expect it either to break down significantly or to go up significantly from this spot, like we are at horizontal support as well, or established range of horizontal support. But from earnings, this should, if this doesn't do this, like it must, if it goes badly, it should do this. If it doesn't do this, we have a bullish bias for an eventual breakout and retest of the high area. Come on, I'm clicking shit randomly. Like if it doesn't break down, it should break out. And I don't mean this from earnings. I mean, if the reaction from earnings doesn't cause a breakdown and just like go sideways a bit, this is bullish pressure. And it should eventually, after the sideways move is done, it should eventually move higher. Though we've had flow on this one, expect it to do positively. I might actually play earnings on this one. I haven't bought it yet, but I kind of like what the flow was saying, which was 25C for next year. Uh, so I kind of like this one. Hasbro already talked about. Intel keeps getting bullish flow. I think there was some 50 for yesterday that I haven't posted yet. We shall see. Like Intel shouldn't do well based on earnings. I would wait for earnings and not do anything. I don't like Intel. NEM corrected. Now the question for this one is whether the higher gold prices translate into actual EPS performance. If they do, this could potentially go higher after a bigger correction, like goes to 85-ish. Also needs like 21 EMA connect. So another day or two of correction, maybe this, and then it should go higher. Deck, I think this one had flow, but negative one. And I think expectation was that it will go to 80, and then we can buy it. But we shall see how it plays out. This is wait for earnings, and if we go here from the long-term trend line, maybe it's a buy. And finally, Friday we have Procter and Gamble. So staples have been doing horribly, but they're slowly turning. Like even here, Coit's a staple, Philip Morris is a staple, and they're kind of looking bullish. I put PG on the list because kind of the same, and I would small moves in these stocks cause a high percentage gain in options. So this doesn't need to go to 200 or something for you to make big bucks on options. If this goes from 150 to 160, like this can be a triple on options, even longer term options like June of next year or something like this. So I would expect this to perform well because staples seem to be turning into um, the market seems to be turning on staples. So uh, I think this was the only one I wanted to talk about. Was this? I forgot to take all the other ones out. So yeah, the idea is that the market seems to be turning on staples, and this tends to move a lot when it turns like from a bottom, like we had this move here. So like we had this move here. So from extreme oversold, this tends to perform very well. You can wait for the breakout, like I explained for which one was it? Honeywell. Like this doesn't need to go up from earnings, but it needs to not make new lows from earnings. So if it goes sideways, then we are under pressure for things to go up eventually. So if this doesn't break down significantly, and it could go as low as 142, like this is a slam dunk buy in my opinion. If we get a breakdown and we go lower to 142 area, this low here, I would expect to get a bounce and eventually a breakout. So that's kind of the logic here. Uh, I haven't looked at all the flows quite yet, but it's looked bullish. Then we have, let's go back to breadth on the market. Sort of turning and doing a crossover. We went lower, but didn't make new lows here. This one looks also like a higher low. Yeah, nothing really pointing to new lows coming our way. And what we see, like for example, in TLT or yields, like this to me looks like a fake out, and we will soon get reason for yields to spike. Like you can see the bullish divergence here, and I'm assuming this is foreshadowing a very hot CPI print that we will get on Friday. And this will be a fake breakdown on yields from the pennant. I would assume we would get yields spiking again at least to like 4.8 on the 20 year. We'll see how it plays out. A bit of conflicting messaging, like oil is trading as if we're getting a recession. Yields are not trading like we're getting a recession, they're neutral. Dollar is trading like, again, neutral, but bullish bias. Kind of looks like maybe we do a head and shoulders, like from this head and shoulders, and we should be going higher, that high. Maybe this, something like this. Yeah, conflicting messaging across the board, but equities are saying we're going up, or the up is at least a retest of this higher range of the trend line. And just like a small recap, I think the only risk is if the cockroaches of the banking sector realize when we get Xeon earnings on Monday post market. Fortunately for us, it comes very quickly. But if we pass this hurdle, I would expect we get a big VIX crush and the market goes significantly higher. Like the bull bear pivot for VIX is actually 20. If we do not hold 20, uh, and if we pass the Xeon test, things should be good. We have a lot of room to crush VIX, go back even like to 15-ish, even lower potentially. We have a lot of room to crush VIX now, and that gives a backwind. And flows have been positive, especially for Amazon. I think we got another flow on Friday. This looks good. Tesla with that 520 flow, like it's hard to be bearish in this situation. Okay, so hope this helps. Have a good one. Bye bye.